From Wall Street to Main Street to help small business owners have the same capital as corporate America and give them the same resources as a larger company. We cover business funding, business credit, scaling, business consulting, and much more. Check out the website at shieldadvisorygroup.com. Welcome to the show, The Liquid Lunch Project.
Hey, what's up, everybody? Welcome back to the Liquid Lunch Project. I am Matthew R. Meehan, alongside my partner, the Professor Luigi Rosabianca. What's on tap today, Lou?
Oh, Matthew, my dear partner, there are few industries that are as complex and convoluted as the card processing platforms. And today, to unpack this all and peel back the onion and really show us how things work, is Jeff Maine, the founder and president of PayProudly. Jeff, welcome to the podcast.
Thanks for having me, guys. I'm looking forward to doing the best I can do to peel back a pretty convoluted, confusing industry.
Well, let's start with the typical credit card transaction. You've got 3 to 4% fees. Can you break down for us the tiny little components that make up that 3 to 4% credit card fee?
Yeah, so a big part of that most people think it's MasterCard and Visa that do all of this, and really at the end of the day, your card brands have what they call a card brand fee, right? So they have a flat fee that they're going to charge, and it's on every single transaction. And really, and then you have your interchange, okay? And interchange is going to be charged. It doesn't matter who you are. We're all on the same, level, from, your Walmarts of the world to your small business owners that are running their shops. But within interchange, you have all kinds of different segments for different businesses, right? You have restaurant interchange categories. You have utility interchange categories. You have all these different interchange categories that affect different types of business. So if you and I, Lou, have the same business, and I use the same credit card, or different businesses, and we use the same credit card, I may pay one interchange category because of my business type, that you're going to hit a different interchange category on your business. And then it breaks down even further from within the business based on if you're chip reading the card, or if you're swiping the card, or if you're manually key entering the card. And that also boils down to what type of card it is. You've got debit cards, you've got reward cards, you've got American Express, Discovery, but all these different cards. I can pull 5 credit cards out of my wallet today, and you can sell me the exact same thing at your business, accept it the same way, but every different card has a different interchange category that it's going to hit based on the type of credit card it is. So, and that's where it's such a confusing industry. And I really preach to our business owners that are on our books, and even ones that we're talking to, is let's look at effective rate. What does it effectively cost your business to accept Visa, MasterCard? If you try to learn all this interchange stuff, it's going to get very confusing. But we've got an AI generated proposal system that we can shove those statements in, and we can read every category that you're hitting, and we can give you an apples to apples comparison of exactly what you're paying now and what you would be paying on our processing platform. And it all about effective rate. What does it cost your business to take credit cards?
Well, Jeff, I think you hit on what the true issue is. Everyone here on this podcast is a raging capitalist. So we love making money, and charging fees is great because you're providing a service.
That's right.
The problem with the industry is the lack of transparency.
Yes.
So no one really knows what those fees are. So kind of explain to the entrepreneur, small business owner that's listening today, if they had a business, what are the different types of platforms and options at their disposal? Because there's a dual pricing model, there's the surcharging model, there's just using regular old ATMs.
There's a lot of different ways that you can take credit cards today, and there's ways. We work with service businesses, for example, all the time, that just key everything in, and then all of a sudden we put a phone app on their technicians' phones where they're able to tap pay, out in the field without a piece of hardware, but we can qualify those cards for a lower interchange category because of that. So there's all kinds of ways. There's not a one size fits all for all businesses out there to take credit cards or to be set up for credit cards. It's all about your business, what your interaction is with the consumer, and what type of system are you using to be able to take those credit cards. Are you taking them from the web? Are you taking them from phones? Are you taking them through a point of sale system? How are you taking them? Because there's all kinds of ways that we can qualify your business for lower interchange rates based on just how you accept those cards and what kind of platform you're doing. And, you know, if you're B2B and you're doing all B2B transactions, business to business, there's ways we can qualify for you for lower interchange categories just for for inputting some tax codes in there. So there's all kinds of little snippets and different things we can do. And anytime a business owner out there is talking to a credit card processor, if the processing company is not asking more questions than what they're, if they're doing all the talking and they're not asking you about your business and what you're doing in your business, they're not doing you a service, because they really need to be learning about your business and learning what you do to offer the solutions that should be in place to take advantage of the lowest categories and the lowest rates possible in accepting of payments.
So, I've seen, and because we work with a lot of business owners, and one thing that we ask them for their merchant statements to come over to us and look, right?
Yeah.
So we'll ask a merchant or a business owner, right?
Yeah.
What they think they're paying and what their rate is. They're usually about, 2.5% to 3%, but the truth of the matter, it's usually way higher than that, right? And I think your industry gets a bad rap because people come in there with a lower introductory rate, and then within several months later, that rate goes up, and nobody's. Maybe they notify the owner or they don't. And next thing you know, they think they're at 2, but they're really at 4. So it drives his mouth.
A lot of the reason that happens is interchange gets changed a couple times a year. So all of these card issuing banks are really who are setting the majority of the interchange rates out there. Those are the people that are taking the risk of credit cards.
Can you explain what a card issuing bank is?
Yeah. So, like Chase, who's issuing the Chase Sapphire card, or whoever, when you look at your credit card and who those back end banks that are issuing those credit cards are your card issuing banks. And they're the ones really that are driving the interchange categories. And basically, as they're giving more and more and more rewards to the consumer, to us, for using their credit card, they just go in and increase interchange, right? So that's, these business owners are paying for my Delta airline tickets, and that's what's happening, and that's how it all falls back in line. But they're setting all these prices, and the business owner's paying for it. And that's kind of going back to what you were saying, Lou. There's a lot of segments of businesses that can do dual pricing or can do surcharging, where you're offering a credit card price and a cash price. But how you do that and what you do, Visa, MasterCard have strict rules around that. And you need to be dealing with companies that know what those rules are and are programming the equipment to handle it the proper way, and are telling your customer exactly, how are you processing my payment, or you can get fines and you can be shut down. And there's a lot of things that can happen around that.
So Luigi has this dream. One day he wants a Shield Advisory credit card, right?
Yeah.
Well, we're not a bank, right? So how do you see these smaller or mid-sized businesses actually get branded credit cards? How does that business work?
Getting branded credit cards. There are ways out there. We dug deep into this recently because we wanted to do a Proudly credit card, and be kind of, and you can do it.
It's tough, Jeff. It's tough.
It's tough. But you have to, they want you to issue a lot of credit cards. So how are you going to issue? And we even had some big relationships behind us that we could do some different things. And we were trying to do different things, but I mean, they want hundreds of thousands of cards to be issued, and they want to know how you're going to do it, and what you're going to do. And it's not easy. Now you can do like the private, you can do like the credit issued cards, where there's the pre-funded cards. You can do that pretty easy. But the credit cards are a different animal.
So how does that work? Right? Does the brand make some money on that? Do they just do it for advertising purposes? Is the bank making money? Does everybody have their hands in the pot?
And that's the whole goal behind it, is to get whoever's brand does on the card to get some, if they're going out and issuing these cards and they're getting it in the hands of holders, that they're going to make money. We were working with some big nonprofits, and that's who we were trying to do it behind, that have a big database of people that we thought we could issue a lot of cards. But at the end of the day, it's really hard to get a bank to get behind it and do it.
Yeah, because at the end of the day, it's not the brand that's liable for the money; it's the bank that's behind
the bank. That's right. There's no liability for anybody other than the card issuer, really. And then you get your card processors like us, who we have risk in transactions that we're not writing fraudulent business. But I don't think a lot of business owners understand that either. Is when they don't understand what the risk of taking credit cards is, but the true risk for the processors is that I'm going to go take all these credit cards for payments, and I'm going to shut my business down tomorrow, and all these payments are going to come back as chargebacks, and the processor is responsible to pay all that money back. So, in a time like COVID, when all businesses shut down and all these, event businesses had all these events on the books that they had taken money for, and now they couldn't provide the service, and they didn't have the money because they had already spent it, the processors lost all that money. And so that's the risk when they're underwriting different types of businesses. Restaurants are probably the least risky of business that we have, because you pay for it, you get it, and you leave, and it's done. And then it moves. But any prepayment, any pre-charge of anything is risky in the processing world.
I think there's something about the industry that people don't appreciate. It's a very high-tech, sophisticated industry. Yeah. The largest employer in Silicon Valley is Visa.
Yeah.
Walk us through a little bit about the impact of that duopoly of Visa and MasterCard in your industry.
We really don't get too involved in our industry with the card, with the brands. Obviously the big, like TSYS does, and they'll be at our shows and they're pushing but it's a branding thing. We really, on our side, and obviously they're setting rules around like dual pricing and surcharging, and so they're driving the bus of how we do what we do, and if you've got to follow what they say, even if you don't agree with it. But but from just a day-to-day standpoint, obviously technology is a big deal of what we're doing and how we're able to sell processing and what type of devices and all that stuff. But the brands are basically saying, you got to do it this way, and this is how you're going to do it, and this is how much we're going to make. And then people will start kind of going around and, manipulating and trying to do it their own way. And then they'll come in and cut it off again and say, no, you're not going to do that. And here's how you're going to do it. And then the issuers, though, that's going to go back to the TSYSs and the First Datas of the world, and then they're going to come out to us, the independent sales organizations, and say, hey, you've got to follow these rules, or we're not going to allow you to sell it anymore. We're going to start shutting down your merchants that you're setting up against the rules. And you're going to see more and more of that, especially in this dual pricing and cash discounting world, because it's a lot of businesses out there were set up before the rules changed, and they haven't changed how they're doing it yet. So you're going to start seeing some fines being issued because, as soon as a consumer complains and it's not right, they'll complain to MasterCard and Visa. MasterCard and Visa is going to notify they're going to go to TSYS. They're not going to go to the merchant. They're going to go to TSYS and say, you have a merchant on your book of business that's doing it this way. And then TSYS is going to have to go to the merchant to shut it down.
Can you give us some examples of what they could be doing wrong?
Say that one more time.
Can you give us some examples of what they could possibly be doing wrong without even knowing it?
Yeah. So one, if on a receipt, if they're advertising on a receipt a credit card adjustment, that's against the rules today. You've got to, if you're going to do dual pricing, you have to have a cash price and a credit card price. MasterCard and Visa even take it as far as they want it in the menu. They want a cash price and a credit card price in the menu on the items at a restaurant. They want, it's not really getting pushed to that level, but if it's on a receipt as a credit card adjustment or a credit card fee, that's against the rules.
Well, we've seen this for years. I mean, if you go by some gas stations, they've always had the credit card price and the gas price. I think it's just trickled down, especially from COVID with the prices of everything. Small business owners were getting hurt at the end of the day. And that's why I think this portion of your industry kind of exploded, right? But with rapid growth also comes a low barrier to entry with some of your colleagues that come in there and just don't explain things right. They get the sale, they get in and they get out.
Yeah. And we've had a lot of that, and you'll lose merchants to that. And then they come back to you in a year because they realize the grass wasn't greener on the other side. But you know, that happens. And it was a boom in our industry, and the margins went up for those merchants, and you know, but business owners were saving a lot of money. And hey, face it, as a business owner, credit card fees is a major line item for any, you know, business that's processing a decent amount of business. That's a major line item at the end of the year of what kind of fees they pay. And in today's world, if you're not, you know, the shoe store that's competing against Amazon, or the business that's really, you know, it's all about price. If you're in any business that's not all about price, then you can do this and it works, and you can eliminate your credit card fees, or at least eliminate 70 or 80% of them. And we have businesses signing up for that every day and are being very successful with it.
You know, how are you guys? I've always been wondering this, because the industry has actually changed a lot since you've had so much experience and you've been in for a long period of time. But how are you competing with the Squares and the Toasts of the world, right? And all these people that are giving away technology for niches, but the catch is, I'm your processor.
Yeah, I mean, you know, and you know, restaurant. If you're in the restaurant world, I'm not heavy in the restaurant world. But I've lost some restaurants to Toast, and you know, and that's happening. And it's interesting. You know, we offer a different level of service than anybody else is going to offer their clients, and so we sell that. We sell the clarity piece and the people that we're going to answer the phones. We're going to do this, and but you know, Toast is out there giving it away. Square's got a different market. You know, their market is the smaller merchant, and you know, that's not really the merchants that we're going after. So we take more from Square than they take from us, because as merchants grow, we can really give them a lot better added service as their business is growing and what they're doing. You know, and Toast, what we have is, you know, it's all about price, it's all about money, and then they switch over and they lose all the service side of it, and a lot of them are upset. But you know, restaurants for me are not that's not our vertical. That's not where we're going. And so we sell them, but we're not installing point of sale systems like that any longer, because it's a race to the bottom in that market. And go look at Toast's, you know, stock prices and all, you know, the financials are all out there. They're losing money. How long can they keep losing money before they continue to just raise prices on credit card fees to make that money back? They have to do it. So.
Jeff, this is America. Making money is optional in the public markets.
I guess, you know, it's not optional in our market, but you know, they can't continue to lose money every single year.
Jeff, how have platforms like Apple Pay affected the industry and your business in general?
Yeah, I think you have to keep up with those industry changes, right? I mean, if we're out selling credit card processing to businesses today and we're not enabling businesses to take Apple Pay, we're missing it. Google Pay, all the above, right? I mean, it's that the future is that we're not going to even carry a credit card in our wallet. And we need to know that, right? We need to be enabling our businesses to be able to accept those type of payments. So, you know, we're just keeping up with those changes, and change is good, but you know, it gets you back out there talking to your current customers. And you know, I think a big issue is with this industry is the industry walks into a business and sells you, and then they walk out and they never talk to you again. And they're not keeping up with the change of the industry with your current customers. They're only looking for new customers. And so we've made it a priority that our current customers are more important to us than the new customer. So we've kind of flipped that script, you know, that if we can keep our attrition super low, that benefits our business big time. So we're doing everything we can. We touch our merchants every quarter. We have a sit down with them once a year to go over their rates and where they're at, what they're paying and what they're looking at, what changes they made in their business. And we do that all because that is so important to us. It's easier to keep somebody that's already on our book than it is to go get a new client.
That is an awesome business philosophy. Go deeper with the clients you have than wider with the clients you don't.
Right.
Hey, Jeff, let me ask you a question. Let's talk about the ugly side of this, right?
Yeah.
So you're swiping all these cards. You're I don't know, you're an event coordinator like you were in 2020. You have all these events, right? And then all of a sudden the world comes to an end. You have all this money held with the processor who's not releasing it. I've heard horror stories there.
Yeah.
I've heard it from Stripe to everybody across the board.
Yeah.
It. Why does that happen? What can you do to prevent that from happening?
Yeah, the processors are, they're holding it due to risk. They've got risk tolerances and they're holding it due to risk. I think one of the big benefits that we have in our business is your processors know who they're dealing with as well. They know their offices and they know what they're selling, right? And so they know that our touch with our merchants is so strong. When we call and ask about these situations, a lot of times we can rectify it because we have relationships with our businesses. They're not just somebody we don't know. So when I call and vouch for a business, they take it serious because they know that we actually have a relationship with them. As opposed to other ISOs that are just in it for the quick sale and they keep moving down the road and they don't know what the business is doing. But there's definitely a risk, in these transactions, and you have to be able to explain to these underwriters what's going on and why it's happening and why what the reasons are of they held this transaction because it's way outside of the limits, but here's why. And when we can, and we get on a lot of that stuff, we get alerts in this business. So I'll know normally before the merchant knows that there's a situation out there. And so before the merchant even gets a phone call, we're already calling the merchant saying, hey, this is happening. This is what's going on. We see you took this transaction. Tell me about it. Or we had one last week where a merchant just did a refund on a credit card that was for way more money than what the original sale was for. And so you immediately start thinking employee fraud or what's going on. And we're calling the merchant before they even get a letter or anything from the processor saying this is happening. And so, when you're in front of all that stuff with merchants and you're keeping them informed and you're walking them through how to handle it, you don't have a lot of these issues anymore.
Jeff, there is a legend out there that there was a lunch sometime in the late 50s with the Bloomingdale brothers. Those were of department store fame. Yeah. And they went for their daily liquid lunch. Had to give the plug. And the two brothers, they checked their jacket pockets. They checked their back pockets. Like, geez, we forgot our wallets up at the office. How are we going to pay for lunch? And these guys were old school patrons. And the maitre d' said, no problem, just pay us tomorrow. And they're back at their office. They're saying, this is stupid. Everywhere I go, I have to walk around with a checkbook and a big fat wallet. Why don't we come up with some sort of payment system? Because after all, we're always going to the same restaurants. We're always going to the same bars. And the Diners Club card was born.
Okay. Yeah.
And then the Diners Club evolved and Amex went from shipping and freight to, hey, if we're taking, Western Union type telegrams and payments, why can't we do the same thing? And then it evolved from restaurants to merchants to retail to brick and mortar. And then the chips got implanted. What is the future of credit cards? It's accelerated so much in 70 years.
Yeah.
But is there a future, like you said, where we won't even have credit cards anymore? It'll be either embedded in a wearable or our phone?
I think so. I think we're definitely moving that direction, right? That people are going to carry less and less in their wallets and more is going to go to our phone or our watch or our something, right? I don't think it's going to get as far that they're going to put a chip under our skin like people say. I'm not going to have that done. So we'll see. But I definitely think we're going to go to more and more contactless payments, right? That it's just that you're paying with your phone, nobody's touching anything, and that's the direction. I don't, a lot of people, they ask me questions about, all these different types of currency that are being introduced and all this different stuff and what's that going to change in our industry. And I don't see the future right now of us changing from a credit. People live on credit, right? That's how they operate. I don't see that changing. And I don't, a lot of these new currencies and things coming in, it'll be interesting to see, right now, from the card acceptance brands and standpoint, it's not until it's federally regulated, it's probably not going to happen in the majority of businesses. And so, who knows what changes in the future, but I think for any of our companies to remain, viable in our industries, we've got to be reading about that stuff and keeping up with it and knowing what's in the future and partnering with the right companies, partnering with the big TSYSs of the world or the First Datas that are keeping up with those changes so that we can continue to just evolve with the change.
Jeff, I hope you and I are right about the whole biometrics and implanting a chip. But Matt and I went to one of these conferences a few months back, and we listened to the CEO of Clear, that outfit that does like the TSA checking.
Yeah.
And he said that the next generation of Clear is going to be in the banking space. So they will be using, in his perfect world, they will be using biometrics for payments and banking. So who knows? Maybe one day we'll be going to a restaurant. I'll give you my fingerprint.
Yeah, I guess. I don't know. I don't really. That's a little bit over the line for me.
Yeah. It's a bit too Star Trek-y.
Yeah, I don't know. I'd rather give you my fingerprints than having to sign. What's up with having to sign at some places and having not to sign these things at other places? Nobody really signs their signature, by the way. Everybody just scribbles, so it's all bullshit anyway.
Yeah. In today's world, the signature doesn't even mean anything. And a chip, when we went to the chip, businesses really aren't required to get a signature. So
what did the chip do?
That's a great question. That it started in Europe and then it came over here, and it's definitely more secure because they're able to steal the credit card swipe, off the back of a credit card, and it's definitely a more secure transaction than a swipe. And because it's embedded with security and it changes, but the swipe is still around. We still have not gotten rid of it, and so.
Come on, I kind of miss that carbon copy metal magnetic strip machine.
Yeah, you miss all those days, huh? The knuckle busters is what we call them.
There must have been so much fraud because they couldn't even tell if your credit card was maxed out when those things were ran.
Yeah, they can take a credit card today still and swipe your swiper off of it and put it on a different credit card with my name on it, and I can go use it. So there's so much fraud in the swipe world. And that's where it happens. And there's ways around fraud more so from the keyed world with address verifications and different things that are going on. But there's a ton of fraud in the credit card industry. And you've got to be, we get phone calls literally daily from fraudulent businesses trying to get set up to take payments. And they'll set these fraudulent businesses up and they'll take credit cards for 2 or 3 days and get that money and then just shut it down before they get caught. And it's all stolen credit cards. So, we'll have gateways that get tapped and they'll just run sequences, over and over and over on thousands of credit card numbers that they've stolen. And they'll just be charging it like $2 or $3 until they find a good one. And then they'll go sell that card off and people buy stuff with it before it gets shut down. And there's just a ton of fraud in it. So
Jeff, thanks so much for being here. We want to be respectful of your time. Can you tell the audience where they can find you and your company?
Absolutely. Would hop out on LinkedIn, Jeff Maine, PayProudly. Websites www.payproudly.com. Feel free to contact me, jmaine at payproudly.com. And I'd love to have conversations with your listeners and just bring them some clarity around a space that there is no clarity in. So I'd love to have that conversation. Conversations are free. We'll give you a proposal. We'll talk to you. We'll talk to you about what we do and whether you keep doing business with us or you move over to, take that proposal back to your current provider. That's fine. If we brought you clarity, that's part of what we do and who we are.
Hey, Jeff, last question before I let you run.
All right.
What credit card do you use most?
So for my business, I use the Delta card. So that's my business card. We fly Delta, so I use the Delta card, and then my personal card is the Chase Sapphire card.
Love it.
So,
well, thanks for being here, Jeff. We appreciate it.
Everybody, appreciate you guys. Thank you so much for having me on your show.
That's a wrap of the Liquid Lunch Project. We'll catch you on the next episode.
Thank you for listening to the show. And make sure you subscribe, leave a review, and share it with a friend. We'll see you on the next episode of the Liquid Lunch Project.